What's up, Ichimoku traders? Chris Capri here, SecondSkiesForex.com. Okay, so this is the second wave setup strategy video that we have, and we're calling this the Wave 2 setup. And so in the prior Wave 1 setup, we had talked about how we are using the B point and manipulating that as a potential way to use wave structure and get into a trending move. In this one, we are shifting focus to the C point. And so it's going to have a slightly different approach. So let's kind of get into this and what this is really about. So the Wave 2 setup methodology is this method or vehicle for using the wave structure plus the price calculation plus the 5 lines to determine a potential C point. So it's much more predictive versus the Wave 1 setup. The Wave 1 setup is very clear. We know where the B point is. But in the Wave 2 setup, we don't know where the C point is. However, when we combine wave structure plus price calculation plus the 5 lines, we can kind of get a predictive or potential possibility for a C point and thus an entry. The advantage of this is that if you think about it, just in terms of wave structure alone, if you can get relatively close to finding out or predicting where that C point is, then you have the highest plus R potential because you're catching a pullback and you're catching towards the lows of that pullback or towards the highs of a pullback in a bear trend. You're catching that pullback as close to that C point as possible, and that means the next leg up should give you a lot of profit potential. The challenge in this is that it's somewhat predictive. It's a little less solid. You know, the B point, we know where it is, so we know exactly where and how we're getting in. The C point, we don't know entirely where it's going to match up. So there is a little more uncertainty in this, but the offset of it is you get plus higher R potential on this. As a general rule, 75+% of these trades need to be with trend. So we're really mostly focusing on this with trend. The examples we're going to be talking about in this are with trend. I will talk about the current price action on the euro dollar and the dollar yen to talk about how I'm looking at potential counter trend setups and if we could use this Wave 2 setup and how that would work. But for the beginning of this, you're just going to be focusing on Wave 2 setups with trend until you get really, really good at it. And then as you get really skilled with it and your overall Ichimoku skills increase, then we can start focusing on building your counter trend, kind of catching the first counter trend setup or potential wave structure disruption to give you a chance to catch an early reversal. So with that being said, we're going to talk about 3 different versions of the Wave 2 setup or types of pullback. So the first one, V1 of the Wave 2 setup, is, and you're thinking about this with trend. So if we're above the Kumo, we're bullish. If we're below the Kumo, we're looking for bearish setups. But assuming we're above the Kumo, and we can just talk about bullish ones for now, when you have strong momentum and you have a shallow pullback to the Tenkin, then that can be a possible opportunity or way for us to get in the trend. The thing about it is that these are going to be some of the least common ones. However, I will talk about alternative methods to get in this. If you think about it, most pullbacks don't go to the Tenkin and take off. They only do that when there's super high momentum and there's just the pullbacks are super shallow. They don't last long because if it does last long, it's most likely going to get past the Tenkin. So we're talking about very shallow pullbacks that do not last long. The upside of this is that we know there's high momentum to the move. The downside of this is these things happen much faster, so they're a little bit harder to catch. V2 of the wave setup is we have solid momentum, but we have a slightly larger pullback. And what that means is that even though the pullback is slightly bigger than the V1, we're not talking about a V-calc. We're talking about an E-calc or an N-calc. So they have slightly bigger pullbacks, but they're not a 50% plus retracement into the prior I wave. V3 of this is when you have solid or decent momentum, but we have a much, much larger pullback, and that automatically qualifies it as a VCalc or VCalc type pullback. And if you look at the VCalc structure, you're talking 50+% pullback of the prior I wave. So when that's the case, we're going to be taking a slightly different entry and structure and setup. Now, what I'm going to do here is I'm going to show you some examples of this on the euro dollar and the dollar yen. We're going to talk about recent price action leading all the way up to the current day price action. And I'm going to show you various versions of V1, V2, and V3 and how we're kind of using the structure and the price calc and the 5-line context to kind of give us an idea of how we can spot a potential C point. And so we're going to talk about methods to kind of determine this. The main anchor for this is really going to be your ability and skill set to read the price action in relationship to what type of pullback we are forming. Is it a V-calc forming? Is it an E-calc forming or an E-wave type structure? Or is it an N-wave, N-calc type structure? As you go on and practice these again, you'll start getting better and better and better at determining what these types of pullbacks are or what kind of wave structures. Is it a V-wave structure? Is it an N-wave structure? Is it an E-wave calculation or structure? This will increase over time. In the beginning, when I show you examples, we're going to talk about just really the entry format. And then after I talk about the examples, we're going to get into stop loss placement and take profit placement and some potential tips to kind of give you hints or ideas on how to get better at this as time goes on. So let's get into some charts here. Okay, so what we're going to do is we're going to walk through the price action from mid to late March on the dollar yen up through the present. Then we're going to look at euro dollar over the last several months all the way up to the present. Talk about where I think both of those are going based upon the current context, wave structure, 5 lines, calculation, the whole thing. So dollar yen was below the Kumo for quite some time. We have a pullback, and then we have a new low forming a D point, but then we have a counter trend pullback that you could say this is a full N wave structure. I would call it that, but it breaks the prior C point. So we have wave disruption, and we are now above the Kumo. Okay, so we're going to try and predict the potential C point of where this is going to pull back. And there's a very simple method to kind of determine what kind of pullback or wave structure is forming. So what I like to do is take a trend line and kind of draw it through the midpoint of that particular move. And then as the pullback starts to form, I try and draw, again, a trend line that kind of goes through the middle of the candles. And the whole point of that, let me zoom into this a little bit here so you kind of get a better idea. The whole point of this drawing of the trend lines through the pullbacks is to kind of give us a visual way to potentially identify, hey, what kind of pullback are we in? Are we in a V-calc pullback? Are we in an N-calc pullback? Are we in an E-calc pullback? And by drawing a trend line through the midline or kind of the middle of the pullback and the wave structure and the particular I wave, it will help to visually give us a better clue as to what we're looking at. So what I'm going to do is for the next few lines, I want to just kind of draw some of these ahead of time, and then we'll go through them one by one here. So I'm just going to draw so you can kind of get the idea of what I'm doing. So let's draw that one, extend the line. And part of this is, somewhat artistic. It's not pure science. Maybe if I was some sort of math major or something like that, I would be able to figure out a way to codify this, but sadly that's not my skill set. So let me just draw a few more of these. And then we have this super strong one here. This one's a little tough because it starts off and then it just goes super impulsive. So I'm just going to kind of draw it from this last I wave up. And you'll notice that when you start to draw these little lines, it starts to make it a little bit easier visually to kind of determine what kind of calc and pullback you are in. This is a very good practice. It's something that kind of took me a while to kind of figure out. Part of it was kind of integrating some price action skills I had. But when we do this, as I start to draw these lines, if you know your N, E, and V calcs, you could probably start to automatically determine, hey, what kind of wave structure this is, or what kind of calculation structure we are in. I'm going to do this as one. It's really just like a 2-candle pullback. Okay, and then we have wave disruption, but we'll draw this one here real quick. Almost done. But as I'm going through this exercise, and it's a really good exercise for you to do, it should almost subconsciously start, your mind should start kind of being like, oh, this is an N calc. Oh, this is a V calc. Oh, this is a, E calc. It should start to kind of naturally form in your mind. And if it's not, then you just kind of keep practicing it, looking at the diagrams of the V, N, and E calcs, and eventually it'll start to come to mind. So I have deleted the cheat code for this, if you notice, because in this case, since we're not, it's not that we're not using this, but it ended up making the charts look really cluttered. And so I kind of wanted to avoid this here. So let's kind of get into this. Okay, so looking at this particular, so we have wave disruption here. We've broken this here. We are above the Kumo. So now we're looking for with trend setups, and therefore we're looking for C pullbacks that give us an opportunity to get into it. So we have a very strong I wave. It's like 4 bars up. And then we have a corrective pullback, but it's not necessarily, it's not a super shallow one. It's not like this, and it's not like sideways. It's not like this. It's a decent pullback. Is it 50% of this entire move? I doubt it. So that is from here to here. What is that? 107 to like 105 and a quarter. And so it's not quite, I mean, it's actually pretty close to a 50% pullback. I consider a VCalc that is anything that is 50% or greater is a VCalc in my determination. And so what we're really doing is we're allowing a pullback to happen, and we're letting a few candles form. And we're doing this because very rarely are pullbacks on any time frame just a few candles. The ones that are just a few candles like this here, they're going to be very hard to get in. And the way that you're probably going to get into those is more of a wave 1 setup. You're taking the break at the point B. That's because if it's a fast pullback, then you're not going to have a whole lot of time to get into it. You're not going to have a whole lot of time to kind of digest it and see what kind of pullback you are getting. It's just a strong momentum move, so we should be trading more wave 1 setups, trading the break of the B point. However, the majority of pullbacks are going to be more than a few candles. And so what we're doing is we're letting the pullback form, letting a few candles form, and then we're kind of drawing this line to give it through the medium point to kind of give us an idea visually of what kind of pullback we're forming. And the sharpness of the angle is really what's going to kind of hint or intimate what kind of pullback is forming. Is it a V, an N, or an E? Because this is sharp, it's if you look at it, it's much sharper than this one here. It's much flatter than this one here, or it's much sharper than this flat angle here, and this one is super flat. We can kind of just see it's moving sideways and then pulls back a little bit. So it's very clear that, or it should be, if you're leaning towards any sort of pullback in terms of calculation, you should be leaning towards an E or a V-type calculation or pullback. Depending upon the type of pullback it is forming will determine where we anticipate the C point is going to be. For the most shallow pullbacks, we are looking, and I'm putting the diagram back on there. For the most shallow pullbacks, we're looking for either pullbacks to the Tenkan or somewhere towards the Kijun, no farther than the Kijun. So N and E calculations are most likely going to stop around the Kijun. Very rarely will a single pullback stop at the Tenkan. And if it does, and then continues on, then most likely you're going to be trading a wave 1 setup. We'll talk about how you can do a wave 2 setup on this towards the end of the video when I talk about tips, but especially when we talk about the euro dollar. But for the most part, shallow pullbacks, which are N and E calcs, N is the shallowest, E is the next one. We're looking at pullbacks towards the Kijun. And so we're looking to get in at a potential pullback towards the Kijun when it gets there. I'll talk about stop losses towards the end of this video, but for now, I just want you to get the concept and the idea behind potential C-point locations. For V-calcs, which are much steeper pullbacks, and I'll get into a few over here, like this one, well then, if the Kijun is the relative area where N and E calcs should pull back to, where would V calcs pull back to? Towards the Kumo. So our entry location then becomes either in a bull trend, the top of the Kumo, sometimes inside the Kumo, and at the very least, or at the very latest, the bottom of the Kumo. V calcs by default are deeper pullbacks. Therefore, we have to go deeper into the 5-line context to discover a potential C-point entry. E and N calcs are going to be much more shallow, so we're looking for pullbacks towards the Kijun, or somewhere between the Kijun and the Kumo, but not quite hitting the Kumo. If it goes all the way back to the Kumo, more often than not, it's going to be a V calc, especially if we've been above the Kumo for a long period of time. But if we look at the majority of the pullbacks here, so this one we kind of anticipated that based upon the sharpness of it, it's a V calc. So we're either looking at a minimum of Kijun, but we're most likely looking for an entry towards the Kumo. This one here is a shallower pullback, so we're looking for an entry location in this kind of region. Let me put it more like this. That's the kind of region we're looking for entries. On a deeper pullback like this one, this is our, oops, that's the wrong one. This is our relative location of where we're getting in. For super shallow pullbacks, yeah, you can do potential Tenkan pullbacks, but they're going to be much less common. So then you're looking for really shallow pullbacks. You're looking for this kind of region. You really don't want to be going beyond the Kijun. So in other words, in an N calc, you really don't want to be anticipating your C point is going past the Kijun. That would defeat the whole purpose of it. And if you think about it, shallow pullbacks generally find support before they pull back too much. And where is the most common or logical place for it to find support? In the trend line, in the Kijun. For deeper pullbacks, we're looking in this region. That's the region we're looking in. Same thing here. So this should give you a relative idea of how we're approaching it. Wave 1, very shallow. We're looking towards entry over here. Wave 2 is going to be a little bit deeper, so it's got to be between the Kijun and kind of this region, but not quite the Kumo. Wave 3, or V3, which is a V calc, we're looking for entry locations or C-point locations inside the Kumo. Now, one of the questions you're probably thinking is, hey, should I be waiting for any sort of additional kind of confirmation or anything like that in the price action or anything like that? No. I don't feel like we need to be looking at that, and I don't want you analyzing that. We're using 5-line context plus calculation plus wave structure to kind of determine this. If at any point in this process the prior C point has been violated, the whole thing is invalid. So as soon as you have a C point being violated, which we do here, so we have A, B, C, D, it starts to bounce. A, B hits the B point, pulls back, C. And then this right here, if this had broken above this here, that would be a C violation. So we're not looking for any bearish with trend setups at that point based upon the wave 2 setup. Same thing here. A, B, C, D. Super strong counter trend I wave breaks the C point. We are no longer looking for wave 2 setups on the bull side. We're letting the kind of price action play itself out, see if it breaks through the Kumo before we consider taking bearish wave 2 setups, or it's going to need to break back above this C and B point before we can reconsider that. So that's kind of how we're relating to this. Now that's the dollar yen. Real briefly, just kind of giving you some analysis on the dollar yen here. I think it's got a little bit more to go, but I think it's probably going to fail right around this C point here. When I go into the daily time frame, we are above the Kumo here, but think about this. We have A, B, C, D, and then we've broken below that. So that's a weakness in the wave structure here. So I don't anticipate that this thing is going to break above here. I think it's less likely to break above here, especially with this wave disruption. And now the lines are starting to turn a little bit. Kumo's starting to go more sideways. My anticipation is that it's probably going to, at worst case scenario, make its way up to here, and then I think it'll fail. But if it stops towards, say, 110-ish and then starts to break back below this, then I think we're seeing the kind of the topping out of the dollar yen's rally, which started late June or late May this year. So let me give you another example of potential E structures, basically. So we have something here on the dollar yen or euro dollar where it's a pretty strong trending move and super shallow pullbacks to the Tenkin. Mostly here's one to the Kijun, but it just kind of goes here, size, boom. When you have these kind of short pullbacks with high momentum moves where it spends most of the time at the Tenkin or below it, by default, that's communicating high momentum. So in high momentum moves, pullbacks are more shallow. Therefore, you're looking for more wave 1 setups, taking the break of point B, than wave 2 setups. Because the pullbacks are just too short and too shallow for you to really kind of capture that. And the momentum's just too strong. You're probably not going to get deeper pullbacks. Now, it may look on this chart like these are shallow pullbacks. When you see strong momentum moves like this, don't just think, oh, okay, well, I have to take break of the B point. Go down to the next time frame below it. And then look at these pullbacks. And now, hold on a second. Now look at these pullbacks under a lower time frame context, and you start to see different patterns emerging. Here we have kind of a nice V-calc type pullback. It's going about 50% of it. So where's our entry location around the Kumo? This is our entry location we're looking at. That's our entry region. And I'm saying regions because I don't want you to think of this in a fixed way. You got to think of it more of in like approximations. So, if it's strong momentum move on a daily time frame, go down to the next time frame lower and see if those pullbacks look a little more nuanced. Then it might give you some wave C or wave 2 setup or C point entries. But if you're just going to stay on that one time frame with a high momentum move, then you should be thinking wave 1 setup, trading the break of point B. So that's just kind of a tip I just wanted to throw in there. But let's go back to the 4-hour. And so we have kind of this super strong momentum move that on the 4-hour, it's almost like one big I wave because the pullbacks are so shallow. They almost never touch the Kijun. What kind of pullback is this? It's pretty sharp, but the I wave is so big. So we're looking at not an N calc because it's not really that sideways or very shallow. This is an E calc. So in an E calc, our region that we're getting in is between Tenkin and the Kumo. We shouldn't be going too deep into the Kumo. This should be our region, basically, that we're getting in. And so eventually hits the other side of the Kumo, then sells off, continues on for hundreds of pips lower. I wanted to do a brief, let me just map out some lines here, then I want to talk about the recent price action. So here's what I got for the next I wave down. Here's another E calc. And then it starts to get a little bit choppier here. The waves start to get a little more compact and compressed. So now we're starting to see, there's another E calc. It's not quite making long I moves anymore. And then we make one more strong impulsive I wave down. and then super strong counter trend I wave with a shallow type pullback. Now, based upon the current price action, I honestly think that euro is either bottomed or is pretty close to bottoming. I don't see it, not just on price action in Ichimoku. I just don't really see euro dollar going much lower below 115. I think if euro dollar goes any lower than that, I think it's going to find buyers at 114, and I think it's bottomed out. This is the strongest I wave pullback since mid-April. We have not had, this pullback is not even as close. It took many, many more candles to bounce a total of, so we're talking 118 to 120. It's a 180 pip bounce. But then look at this bounce and look how much faster it happened. So this one is a bigger bounce. It's 115.22 to 117.20. So it's 200 pips, and it did it in about half or a third of the time. So that tells me that buyers are willing to come in with a lot greater force, and they're doing it faster than they were before. So my overall sense is that the euro dollar is either bottomed or very close to bottoming. And this is also a pretty shallow pullback after a strong winner. Think about this pullback here. What happened? Resume strong selling. Almost all white candles. 1, 2, 3, 4, 5, 6, 7. It's like 9 white candles. Contrast that to this one here, which is 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 8 bullish candles. That goes further than this one here instead of like 15 and 20 candles. So half the time, more distance or stronger pullback. And then look at this pullback here. It's corrective, isn't it? So the cracks in this downtrend, in my opinion, are starting to show. It's the first time that we've had a good counter trend pullback that had a lot of force. And the follow-up selling since then has not been as forceful. It's not been white candle, white candle, white candle, white candle, or like this one, 9 white candles in a row. So my overall analysis is that on the Euro US dollar. What else do I want to talk about this one here? So we have an eCalc here. So our pullback region is kind of this right here. It's the space between the Kijun and the Kumo. Same thing here. This is an eCalc. Maybe, I don't really call this an NCalc. So we're looking at this whole Kijun space here. Kijun to Kumo. Same thing here. Kijun to Kumo. To be honest, I would have gotten this one. I wasn't trading euro dollar in this one. I was trading euro yen mostly. I would have gotten maybe one of these, but when I see kind of shorter N waves like this, and they're not quite pulling back to the B point and stopping, they're kind of going midway in, those are a little bit tougher to grab. So if I would have been lucky, I would have gotten one of these maybe. But that's kind of the general format for the wave one setup on this. Anything else I want to show in this? Looking at my notes. No, so let's go on to the next slide here. So I want to talk about some wave 2 setup tips, and then I want to go back to the charts real quick and talk about generalized stop loss locations. These are not perfectly fixed. They're not fixed amount of pips. They are based upon structure, wave structure, and 5-line context. And I'm going to give you relative regions, which are going to be guidelines for where you're going to be placing your stop loss. It will be pretty straightforward or logical once you think about it. So, but let's just kind of get into some wave 2 setup tips. So the first N wave in a move, it has the least supportive context. What do I mean by that? Let's go back to our dollar yen. Okay, so the first time we broke above this Kumo, this N wave right here is going to have the least supportive context to it because A, we haven't spent that much time above the Kumo. B, we're early in the reversal stages. So by default, that's going to have less context. However, if we look at this kind of A, B, C, D, and then we have a pullback here, well, we're starting a new N wave up, aren't we? So A, B, C, D. This has more supportive context because we already have this prior wave structure disruption, and 5-line context that's in our favor. So the second N wave always has more supportive context than the first N wave. And that should just make sense intuitively. The third N wave in a particular move is going to have incredibly supportive context. A lot of supportive context to that. Because we've had a lot of time above the Kumo, we've had a lot of wave structure in our favor, there's no wave disruption, there's a lot of order flow in our favor, there's just a lot going on. Now, I'm not too familiar with Gann, but from what I do remember of Gann, they're often thinking that reversals happen between the 5th, 7th, and 9th, and Ichimoku context or Ichimoku wave structure kind of agrees with that. That the further we get into the wave structure, the greater the probability we're going to have a RTM, which is reversion to the mean. And that's just kind of basic price action theory. And it's also just basic probabilities. Currencies as a whole are more often going to revert to the mean. The longer the trend goes on, the greater that probability increases. So when we look back at our dollar yen, here's our first N wave. Here's kind of our second one, third one. Now we're in the fourth leg up, fifth leg up, sixth and seventh. So now we're starting to get into, once you kind of get in fifth wave, that's where the potential starts to kind of, the scales start to kind of move a little bit more back towards center. Once you get to the seventh wave, the probabilities slightly increase for a reversion to the mean. And once you get to the ninth wave, the probabilities are much higher. Because very rarely can moves be sustained that long. There has to be a lot of supportive conditions for just continue wave after wave after wave after wave after wave. It's very, very hard for currencies and most instruments to maintain that. So again, going back to this here, the higher the wave structure, the greater the probability we are going to have some sort of reversion to the mean. So that's more of just information for you to kind of be aware of. If all the conditions are supportive, you're still trading it until you see unsupportive conditions or disrupted conditions. Now let's talk about stop loss and take profit. Take profit is always going to be a minimum of 2R based upon the price calculation, the 5 lines, and the wave structure. In terms of stop loss placement, so once we kind of determine where our potential C point is, we're just moving the next logical step lower. If our potential C point that we're anticipating where the market is going to stop is around the Kijun, so we're talking an N or a potential E calculation, then where's our stop loss going to be? The next place lower inside the 5-line structure. So that would be inside the Kumo or the bottom of the Kumo. If we are looking at V calculations where our entry is either the top of the Kumo, the middle of the Kumo, or the bottom of the Kumo, then we move the next logical step beyond that, which is below the Kumo. That should be very intuitive. If by some chance you are looking for these kind of super shallow pullbacks, I mean, these are going to be so hard to capture. Very rarely is something just going to stop on the Tenkan on a dime where it's a long enough pullback for you to catch it. If it's just stopping on the Tenkan continually again and again and again, you should either be trading a wave 1 setup on the break of the B point or go, as I mentioned earlier, 1 time frame lower. And then that will show the pullbacks are more pronounced, and that will give you another option in terms of getting into it. But we're just using the logical structure of the 5 lines to determine where our potential C point is, wave structure, price calculation, all that. And then we move our stop loss to the next logical structure below that. So that should be pretty straightforward and intuitive. Let me see if there's anything else in my notes here. Nope, that is pretty much it. This was a long video. And so this one is going to be, in my anticipation, this one's going to be the one that takes much longer for you to learn, simply because of the fact that our anchor point for getting in is not quite as clear as the wave 1 step. The wave 1 step is very, very clear. We are looking for the break of the B point before we're getting into it. This one, we're kind of anticipating and we're predicting. So there's a greater sense of probabilities behind this. We have to think more probabilistically. We're not thinking in certainties, we're thinking probabilistically. And that means that we have to be using our skill set in determining the type of calculation, the wave structuring, context. There's a little more artisticness involved in this. But when you learn how to do it, it's also going to give you the highest plus R potential, because we're trying to capture the relative bottom of that pullback. So there are massive advantages to this. So my suggestion at this point, after watching this video, is 1, watch this video again. 2, practice the first skill of this, which is kind of drawing those lines through the midpoint of the price line to kind of determine what kind of calculation and wave structure are we in. Are we in an E-calc, an N-calc, or a V-calc? As you start to go on through that and practicing that, you'll start to visually get better and better at kind of spotting what is the most likely type of pullback and calculation we're forming. Then once you start to do that, start anticipating where you'd like to get into it. My suggestion would be just start pulling up some charts and going through it. And, like on a simulator would be the best way to do this, because then it can play the candles forward in real time. And then as you see as the pullback's forming, draw your lines, and then start to be like, okay, based upon this, I'm anticipating we're in an E-calc, an N-calc, a V-calc, therefore I want to get in these locations. And just practice this over and over again. And then as you start to do this, you'll start to get better and better at predicting and determining where that pullback is going to relatively stop. And once you start to do that, then you can really start to practice this on demo and then live. So that's the recommendation going forward on how to practice this as a skill set. So again, practice first, ask questions later, watch the video a second time, then spend some time practicing. And then after you've spent, a couple hours, several hours practicing this, drawing the price lines, kind of determining where the calculations are, then start posting some charts. Hey, based upon this is what I'm thinking. Based upon this is what I'm thinking. Based upon this is what I'm thinking. What do you think? And then I'll get feedback. Practice first, questions later. So I look forward to your comments and questions on this. I look forward to seeing your practices on this. I hope you enjoyed this video and found this as a nice counterpart or partner with the Wave One setup. They're relatively similar, and yet they're also very different in terms of style. And they really give you now 2 different options to attack these types of moves. So I look forward to hearing your feedback on this, and I'll see you inside the course.